The euro currency continues to struggle in the month of February. Starting off the month at about 115, we traded recently as low as below 112.5. Now starting to get a little bit of a bounce, but it's been very short-lived. So the technicals still read very, very bearish. And certainly with the headwinds coming, not only with trade, not only with the U.S., not only with the economy, but with Brexit, it seems like there's a lot of obstacles there that are going to be in the way of any sort of rally, at least any sort of sustained rally in the euro currency right now. And the trend will continue at least until there's a substantial fundamental reason for it to stop. I really don't see, we haven't breached the 112 level. You got to go all the way back to the middle of 2017. So right now, that becomes a very critical support. We have not broken through it. It doesn't look like we're going to, push through it with any sort of momentum. But this push that we saw, it started in January, then it quickly rebounded at the end of January, and now we've seen it again extend lower in February. And essentially right now, the shorts have built up. So the only thing that might be able to save the euro currency is a short squeeze. We'll have to wait and see. Dollar strength obviously also adding to that negative push to the downside. But again, it's going to take some catalyst event to get the euro currency back on its feet in the short run. And if you look at what's happening with the ECB, they're really not going to be a whole lot of help. The economic data continues to come in softer. We continue to see political unrest or political uncertainties. There's obviously the Brexit issues, which continue to go back and forth. Some days it's good, some days it's bad. I think ultimately a hard Brexit is bad for both sides. The UK seems to get a lot of the press on that, but it doesn't seem to be favorable to either side if they can't come to some resolution. Likewise with the economic data now starting to look soft, and the ECB talking about keeping policy unchanged as opposed to talking about, or at least hinting towards, raising rates at some point in the future. That seems to have come off the table as well. So I think right now those combined variables are all going to keep the pressure to the downside. When you look at the dollar euro, it doesn't seem to have any sort of upside right now as we see the charts, as we now see in the fundamentals. And I think that ultimately the post-Brexit trade has been something that is very interesting. What's going to happen? Obviously, there's going to be a flutter. There's going to be a knee-jerk reaction. And how that makes the market move one way or the other will be very short-lived. And I think that the euro currency right now looks to continue that downward trend. The economics, the stories in the press today are talking about Europe being the weak link in the global economy. And if you look at what the ECB can do, it isn't a whole lot to prop up the economy. And likewise, once we get through Brexit, will someone else try it? If the UK is able to do this without any real hitches, will someone else try it? And will that put more downside pressure? So I think right now you're going to see strength sold very quickly in the euro post-Brexit, at least when the dust settles, with the idea that, once you get past the uncertainty of Brexit, you still have to deal with the reality of the fundamentals and the economics. And right now, none of that is pointing towards a higher euro. And right now, I think ultimately that's going to continue to push us lower. So that 112 level we're talking about now as key support will likely be key resistance after the fact. But right now we're seeing a steady trend lower. I don't see us breaking through 112 with any momentum. But again, don't forget, we haven't traded there since the middle of 2017. So it is a key level to watch. Always looking forward to Brexit. Things will change very quickly. And again, once the dust settles, I look for sellers to come in with both hands.